Tomorrow, the government will release the most current inflation numbers vis-a-vis the CPI report. The current forecast suggests that the report will reveal the lowest level of inflation in the U.S. in over 2 years. This, of course, would have a profound impact on the dollar, taking the dollar lower, and that in turn would move gold higher, because it would take pressure off the Federal Reserve, making it less likely to be overly aggressive in terms of rate hikes this year. Hello, traders. Gary Wagner here. 11:20 in Honolulu, 5:20 in New York on Tuesday, 11th day of July, 2023, and this is the Daily Report for gold and silver. Gold gained $6.60 or 0.34%, taking the most active August contract to $1,937.60. Because tomorrow's CPI report is expected to show a decline in inflation, we have seen gold rise up $6 and change today. But in reality, it is not so much that gold has moved higher, but rather that the dollar has moved much lower. We'll talk about that more when we pull up a dollar chart. Currently, we see solid support at $1,915. That is the 61.8% fib retracement that we talked about. In fact, on the way down, that we felt that gold could touch between 1900 and 1915. That is exactly what we have seen. In terms of resistance, the first level of resistance, should gold move higher tomorrow, and I believe there is that opportunity if the report comes in as forecast, is $1,955. That is based on the 100-day moving average. Above that is the 50-day moving average at $1,971, with major resistance at $1,980. We are deciding whether or not to send out a trade alert to initiate a long position should the CPI come out as forecast. Because if it does, I believe at minimum, we will see gold rise to about $1,955, with the real possibility that over the remainder of the week, we could see it rise to $1,970 or $1,980 before finding resistance. The dollar continues its downward spiral, down 0.32%, taking the index to 101.315. As we spoke about when we looked at a gold chart, the recent rise in gold has been predicated on a falling dollar. The dollar has fell very strongly from about 103.25 just 4 trading days ago to the low today, where it currently resides at 101.315. After opening right at the 100-day moving average in blue, and then closing well below both that and the 50-day moving average, this was a tremendously large decline that happened 2 trading days ago, a respectable decline yesterday, and a smaller decline today. Nonetheless, we do not see real support in the dollar till about at least 101. It's based on this bottom right here, with real support coming in at 150, and that is based on this double bottom right here. And if tomorrow's report, in fact, indicates lower inflation, it's really going to affect the dollar first and therefore gold secondary. And our rationale behind thinking about entering a long position in gold is predicated mostly on the real decline that we have witnessed in the dollar. Silver declined by 0.28% or 6.5 cents, taking September silver to $23.08. We do see minor support at $22 $21.62, the 200-day moving average. Major support at 21.85, the 50% retracement. It has been moving higher, but we also feel we could see resistance come in at approximately $23.46, the 100-day moving average. So we are going to stand on the sidelines if we enter a long gold trade today or tomorrow morning prior to the CPI report being released. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.